Hello, everyone, and welcome to another episode of Between Two Brokers. Today, we have insurance guru Mandy Davis with Anderson Insurance here to tell us all about what the heck oldie deckles is happening in the insurance
Did you
world.
Just get
Well, I was
on me?
about to say the F word, and then I stopped.
Fancy.
Yes. So unless you, so insurance has gone up for everybody. And I'm sorry if you haven't looked at your bill, but mine went up 30% or something like that this year. Mandy, tell us what is happening. Why?
Well, the good news is it's happening to everyone, so you're not alone. Every day I get a phone call from somebody who has opened their bill or got a notice from the bank that their escrow has changed and want to know what's happening. So really worldwide, but nationwide, for us, insurance rates have gone up for everyone, and it's due to just catastrophic loss. I mean, you think about the last 6 or 7 years, insurance companies are not here to lose money. So,
right.
And when they're paying out major claims, there's the freeze in Texas, California burnt, all the storms in Florida and Texas and the Gulf. We've had several here that weren't major hurricanes, but there was major flooding issues there's been a lot of homes that are just underinsured. That drastic cost of construction that occurred through COVID, where, builders were at $300 a square foot and now they're at $800 a square foot. There's just a lot of homes that were underinsured. Then they suffered a loss and the insurance companies had to pay the cost to rebuild the house. And so it's just that all the insurance companies filed for a higher rate. They can't just make up a price. They have to file a rate, get it approved, and everybody, nationwide, all the companies either filed for a higher rate or just got out of the market. They just won't write coastal exposure. They're like, that seems like a really terrible idea.
Okay. So 2 questions. What are the big companies that aren't writing in Charleston that maybe used to, or coastal areas? And then the other thing that you just mentioned was, so when you get insurance, this is something that comes up all the time. And sometimes insurance agents maybe that are newer or something are asking us about what replacement cost is. Yeah. Okay. Can you explain replacement cost? And then you just said, so let's say you have a replacement cost of like $300 a square foot, just for the sake of an example.
Right.
But to rebuild is $800 a square foot. You're telling me the insurance company actually pays the whole $800 a square foot to rebuild?
Maybe not quite all the way up, but there's if you have a good insurance policy, there's endorsements that sort of create a little bit of a buffer. One's called extended replacement cost, which is an additional 25% of the stated dwelling amount that they would pay out to build your house back the way it was. So if you're at 300, then you get another 25%. And then if there's building codes that, like, you now have to have impact glass, or your railings have to be tighter, or your doors have to be wider, that's new building code, there's another 10% they'd have to pay out to meet building code. So you have the stated value, which might be low, but they're paying out on these other things, which they didn't really intend to. Mm-hmm. And so they're not necessarily, some policies have a 50% extended replacement cost. So you're getting 50%. So you're getting another 150 plus the 10. So they're out a lot of money. And then there's the loss of use coverage, which would pay for you to stay somewhere else. Well, if you live in, Middle America or even Columbia or Greenville, you could probably rent an apartment for $500 or $600 a bedroom. Whereas Charleston, it's $1,200 or $1,500. I mean, just the cost of all of it in Charleston in particular is high. And so they paid out a lot more money than they intended to.
So how do you determine replacement cost when I send you a client?
There's a couple ways. And of course, mortgage lenders also are like, we need the replacement cost estimator. I'm not an appraiser. I'm not a builder. I don't buy building materials. So I'm like, why are y'all asking insurance agents? But in general, on an insurance policy, we're not insuring the land. We're insuring the home. And the idea is, what would it cost to rebuild that house? So if it's a new build, we have a really great idea. If it's an older home, but you've got an appraisal, sometimes on that second or third page, there's like an Excel spreadsheet looking section that talks about cost to build. That guy was in the house. He looked at the crown. He looked at the finishes. He took those things, or she took those into account. So that can sometimes be, a guide. And then there's software that is used that's a replacement cost estimator. But they're based on national numbers, and they're really manipulative. So you can I always am like, I can make this thing say, I can say this kitchen's builder grade, and it's not to get the number down. And so, but again, it's not going to match your purchase price, because your purchase price includes the land and the location and the amenities in the area. So it's what would it cost to rebuild the house? And some of it's a guessing game. I mean, we try to use the pieces, and we try to have conversations. I mean, we talk to builders on Kiowa or Sullivan's Island and say, what are y'all seeing? Like, and they're like, I'm not even going to start a house for under $1,000 a square.
Right.
When you don't want to find it, I had a client who had a huge loss, total loss, fire loss. And they were not with us at the time. They are now, but the current policy they had, they were totally underinsured, and they couldn't afford to build the house back. So, and then the cost to build was so high, they just had to buy a whole different house instead of rebuilding where they were, because costs were so high and they were so underinsured. And that was sort of the company's fault, because they were grossly underinsured and nobody told them. So.
I am certain that I'm underinsured, and I'm going to have you take a look at my policy ASAP.
So when someone buys a house for $1 million, inflated market, whatever,
Right.
how are you valuing?
We typically do it by square feet. So, I mean, you can pay $1 million for a teeny tiny house on Sullivan's Island, or you can pay $1 million for a mansion in,
Ravenel.
Yeah, in Ravenel. So it's, again, back to what are the builders in that area charging? $400 a square foot times the square footage of the home. Sometimes, you do that math and you go, wait, that's like almost the whole purchase price. But land's cheap in Ravenel. Land's not cheap on Sullivan's Island. And sometimes people, even in a new build, you go, you sort of overbuilt. I mean, the finishes you've put in there. So it's almost the whole purchase price, even though the land is so valuable, because you paid $1,200, dollars a square to build. So we kind of have a conversation with the purchaser as well. And then you can kind of look at county record, like what are lots selling for? I mean, we try to do some comparison. The software does some of that. And then really realtors and other people in the industry have a feel for what those numbers sort of look like.
And is replacement cost the biggest factor in the premium?
Yes. It's what's driving it for the most part. Other structures, which again is property, like if you have a pool house, that's a piece of it. Contents to a lesser extent. And then sometimes people go, well, liability is on here and it's at $500,000. What if we make it $300,000? And I'm like, it will save you $8. Like that's not driving your premium. And then different companies rate deductibles. So people will say, what if I get a higher deductible, which means you're self-insuring more. You're willing to pay out $5,000 before insurance gives you any money. How much does that buy the rate down? And for some companies, it can be significant, maybe $600 or $700. For some companies, it's like $85. I'm like, well, that's stupid to double your out of pocket to save $85 a year. The math just doesn't work. And then coastal properties, all for the most part now, we had a couple of fluky companies, which we were super excited about, that did a flat deductible where your deductible was what it was, irregardless of what caused the damage, whether it was wind or a fire or pipes in your house. But now almost every company's back to a separate wind deductible. So if wind causes the damage, you pay this higher deductible. And there's sort of some tiers to different wind deductibles. But jacking those up, again, can bring the premium down, because the more you're willing to pay out of pocket and self-insure, if you're going to pay the first $50,000 yourself, the insurance company's like, okay, well, we'll collect a little less premium.
Other things that bring your premium down, like, if somebody's going to replace their roof,
Yes.
do they need to reach out and say, hey, Mandy, we replaced that 20-year-old roof. Can we rerun my insurance policy?
Absolutely. Any improvements that you do to the house can get the rate down. It can also open you up to other options. we may have had to pick a company that would allow a roof over 15 years because that's what you had. But now you have a new roof, so we can go back to a larger range of companies because you have a new roof. Like, everybody loves a new roof. And the idea is that it's the envelope of the house. If the roof goes, so does everything inside, pretty much. All your contents, all your interior. So they care a lot. There's a company that writes a lot in Charleston County, and they really care about the water heater. I mean, I get it if it's old and it's in your attic and it busts, that's, but it could be in your garage and what's it flooding? Nothing, but they still care about the water heater. So for real estate agents, I feel like we quiz y'all down a lot about, well, what about this? And what about this? And what about this? And we're trying to get the rate down. And there's things called wind mitigation forms that can be really important because it'll tell us that there's hurricane impact glass or that there's shutters or opening protection on all the windows, or that the water heater's new or the roof is new, and all these add-on features that you have a whole house generator. Because you get credits for all those things. And so it's always important to let your agent know, like, big things. Oh, I added a pool. Because you have a whole different liability issue. Or that I replaced the roof or made other upgrades.
Let's talk about pools.
All right.
What does that do to an insurance policy? Because I'm, especially the more people that move here with money, I'm seeing like pools are a big thing.
Yeah.
I didn't grow up with pools.
Yeah.
Like we were all broke back in the 80s. So people to have like a private pool was a big deal.
Right.
But now it's like, if you don't have a pool,
Yeah. Strangely, you pay a little bit more. And I mean, every company varies, but not maybe $100 more for the liability piece. I mean, you have a slip and fall exposure. They call it an attractive nuisance, like a trampoline. I mean, everybody in the neighbor want to get in it or come over, or you look like fun. So now people you didn't even want to talk to are now in your backyard. But there are requirements nobody will take a diving board or a slide anymore.
Can you even install a diving board anymore?
I think the companies will do it. They'll build you a rock quarry and jump off the top if you want to, but insurance companies don't like it. And then they want it to be fenced, again, so that the neighbor's kid doesn't just end up in your pool and nobody knew it. So they really want it to be fenced. And a lot of the pool companies offer these, the automatic close, and you have to have a code to make it open. And those are great. I mean, I think... But it's based on the homeowner to remember to close it. Yeah. Which in my house doesn't happen, because it looks better open. Who wants to look out at that plastic covered pool? And so I think pool people will say, oh, this meets the requirement. But for most insurance companies, it doesn't, because it's user error. So it only works when it's closed and,
So we're $100. That's it?
The liability piece. And then you add the other structures coverage. Because right now, if you just have a fence in your yard, your other structures coverage might be $5,000. But now you need $80,000 more for the pool or anything in your yard not permanently attached to your house. So if you do a pool house or a pergola or anything, a hardscape, all that would be added to the other structures coverage. So the premium goes up for that reason. But there's no big financial punishment. Having a pool.
Another thing I've noticed when I'm filling out insurance forms is they ask about your dogs.
Yes. There's a whole, and then the dog people get all fired up. But the insurance companies think there are, these categories of dogs that are a bad idea. Either they bite or I don't know what. And everyone who has those dogs says it's all a lie. But yeah, there are, the dog pit bulls, maybe German Shepherds, Dobermans, Rottweilers. And, again, the people that have those dogs are like, they're way nicer than my neighbor's yippee Chihuahua. Yeah, that bites everybody. And then some of it, I think, might be more, not even just the bite thing, but that if that Rottweiler, jumps on you and I fall down the steps, your homeowner's policy's paying. You're liable for the damage that occurred on your premises. And that insurance companies pay out for that. So, yeah, dogs, trampolines, railings. I mean, we have this thing all the time that it's 3 steps into your house and you don't have a railing. Well, it meets code. The builder didn't have to put it on there and the house got signed off on, but the insurance company cares. And then they're like, well, the builder said it meets code. And I'm like, well, the insurance company doesn't care about your code. They just don't want an old person to fall into the bushes, and they got to pay out because there's a big liability piece people don't realize to insure. Like I pay all this money and get nothing.
Yeah.
But even if your kid goes down the street and throws rocks in the neighbor's window, your homeowner's policy will pay to repair those people's window because you're a household member that is liable for the damage you caused.
So are you looking at photos and MLS listings to get a lot of this information?
Yes. I mean, Zillow and all those things online have been super helpful because I can see the inside of the house.
Right.
Again, I don't know what material specifically costs, but I can tell the difference between builder grade and custom. And that's a different price point. And then you look at the purchase price, and then you can look at the county record and see of course, everybody tries to get their taxes as low as possible. So they're like, the county thinks my house is worth $4, and it's not. But the land piece, I think, can be pretty accurate. Sometimes the house piece, like what they value your house at. But
I'm curious, people that are moving here that are buying luxury properties, what are the top questions that you get from them? Because they've never bought a property in Charleston before. I'm sure I would assume you get different questions than.
Yes. Well, they panic because they've never seen a premium that high in their whole life because they have a huge house inland somewhere and, they pay $3,000 and now I want $30,000.
Yeah.
Because it's on the beach. Or they go, well, I've always been with Chubb or AIG or Pure, what we call high net worth carriers. And I want to stay with them. And I'm like, well, you should probably call their headquarters because they're either not writing on the coast or your home doesn't meet their underwriting guidelines, some of its values, some of its upgrades. And so they're like, well, I've always been with them. And I'm like, well, it's the coast and it's different. And then a lot of people say, well, I've never even heard of the company you proposed. Because the companies that everyone sees ads for, or they've always had Travelers, Hartford, Safeco, Liberty Mutual, all the characters, most of them will not write on the coast. Or their underwriting guidelines, the older homes don't meet, or the value's too high. If it's old, they don't want it. If it's super expensive, they don't want it. If it's near the beach, they don't want it. If it's on Wadmalaw, where we have no fire suppression, when we have no city water, we have no fire hydrants, they don't want it. So you end up quoting a different company that people are like, I've never heard of this. And you want to say, well, it's your only choice. Welcome to the South. Paradise is extensive and weird. And here we are. So that I think is the most shocking part. Or, the USAA people are super loyal, which I get, but they're not writing. And we're an independent agent, so we represent a lot of companies. What we don't represent are or companies that are called captives, where they kind of only sell their own products. So State Farm, Farm Bureau, Allstate, USAA, Geico, you can just buy online. And call the 800 number and get in the queue and I don't think Geico will write coastal property either. I never come across them and goes, oh, I have Geico. And so I think the premium is shocking. The separate wind deductible that we talked about can be shocking because they've never seen that before. I mean, even in the upstate of South Carolina, you just pay $500 or $5,000 or $2,500, no matter what happens to your house. Down here, we want $2,500, and then if it's wind, it's 1%. So if you're in a $1 million house at 2%, you have a $20,000 deductible. So I think they're shocked.
So if you're looking at an aerial map of Charleston, is it like a rule where it's just so many feet off the coast is this zone, or is it really? Have they studied it and drawn specific lines? And so it's not like, well, if you're 3 blocks back on Isle of Palms, it's this.
Yeah.
Right.
Yeah. Some of it is zip code driven, 29451, which is the beaches, or Kiowa or Seabrook. So proximity to the ocean makes a big difference, just for obvious reasons: the wind, the waves, the harsh conditions, the whole thing. And when you look at, there's wind zone maps, and it delineates wind zone 1, which is pretty much the beaches, the actual coast. So when you go down Bulls Bay, Isle of Palms, Sullivan's, then you get Mount Pleasant, and then you get really the Old Village. I mean, it's in the harbor.
Yeah.
Then you get the peninsula of Charleston, and then you get Folly and Kiowa and Seabrook and Edisto. So that's kind of wind zone 1. And then back from the actual barrier island is wind zone 2, which is better. In Mount Pleasant, it's going north, the right side of 17. So like Ion and all is not in a wind zone.
The cheap side where I live.
Yeah, the cheap
Yep.
side. Daniel Island is inland, even though it's on the water, it's on inland water, and it's Berkeley County. It's not Charleston County. Well, a lot of it. So that can be helpful. The rating's just different. Their statistical loss in Berkeley County is different than Charleston County. I mean, there was nothing really in Berkeley County.
There wasn't.
Of value when Hugo hit.
Right.
So there's no huge statistical loss like driving the algorithms or whatever they do on the backside. And then people get irritated. This is a side note, but like, why do you need my birthday? Why do you need my social? And there's internal rating on that. I mean, a 25-year-old in $1 million house their daddy bought him is a terrible idea.
Yeah.
I mean, liability wise.
Right.
And do they even know what a leaking sink creating huge wood rot is, or do they wait till they fall through the floor? So age, I mean, the older you are can be an advantage. Partly because you made it to 55 and you don't have a huge loss on your record, which says you've kind of got it together. Like you seem like a good risk. And then social security, we don't see any kind of like credit score or anything like that, but it internally can change the tiers. And for some companies, it's a bigger driver than for others. So sometimes I, will get a rate back and I'm like, gosh, that seems crazy high. And I'll say, do you happen to like know your credit score? And they'll say yes and tell me, or they'll say, yeah. And then I'm like, okay, let me try a different company that might not be so credit score driven. Again, they feel like if you can remember to pay your bill, you can remember to call Terminex, kind of thing that you got it a little more together.
And if you filed a claim, did they look for that? I mean, when you plug in the social, is that something that comes up too?
That is more liability driven, like, because you personally were liable for it off your social, but the address will pull any property claims. And we can tell whether it was something weather related, which is totally beyond your control, or it'll say like, $18,000 water loss. And then I would ask you like, what happened? And they'll say, oh, my water heater exploded, or.
Okay. So that was a misconception I had. I thought that, so it's claims that are related to the real estate, not past claims of the individual. Like if I filed an insurance claim and lived in another house, would my insurance
if it was a
premium,
property claim,
yeah.
like you had a lightning strike here and then you move somewhere else, sometimes it will show up and you'll be like, oh, that was my old house. And so that's not going to affect necessarily the rate on the new house. Liability would, if you got sued at your old house because everyone fell through the deck. Then that would carry forward. But just like if you were buying a house that had claims 3 years ago, I can say to the underwriter, that was the previous owner that filed all those claims. Because some people think it's a home maintenance plan. Right. They're like, what about $1,000 deductible? I'm like, how about no? If you have $1,100,
pay somebody.
Your shower's leaking, just fix it. It's the burden of homeownership.
Yeah.
Because you get into a claims frequency issue. I mean, again, the insurance company isn't here to fix your maintenance problem. And so
I had that situation in my neighborhood where I represented the sellers, and they were frugal people, and anytime there was an issue, they filed a homeowner's claim, and I don't think they thought about it again. And then I've stayed in touch with the buyers because they're my neighbors, and they were like, they fucked us.
Yeah.
Like getting quotes because they filed, 3 different times for these minor issues that they could have just come out of pocket and paid for. Yeah. And now our insurance is ridiculous. And is there a expiration on that? Like
usually 3 to 5 years. And being new owners, I mean, that agent could probably go as much as everybody wants to plug it in online and get this data entry answer, a lot of times I just have to call an underwriter and be like, wait a minute, these are the old buyer, the old owners. It's not, and all the repairs have been done, and these people have now done a ton of other repair, upgrades or repairs or whatever, and sort of just hash it out when you can, because it does. It affects, and the same with like auto claims. You see that more, like, oh, my child bumped into somebody, should I file it? I'm like, you certainly can. I mean, you have insurance, you have the right to file it, but they're a young driver, and how many other things are they bumping? So maybe wait, maybe save that.
Let them run into a few more things and then get the car fixed.
But there's some companies, I feel like I see it more with like captives, because you're calling a 1-800 number, or just like, or you call, like a State Farm, they have to log it in that you called. And so sometimes people are really doing an inquiry, like, should I file this claim? And now they've logged it. And then you'll see it 3 years later, there's still zero payout. I'm like, you should be able to call and ask a question, but I see it a lot for like those captives, because I think whoever answers the phone isn't really the agent, and they're logging the call. And I'm like, they're like, we never even did anything. Like, we fixed it. We didn't follow through with the claim. And I'm like, well, it's sitting out there open. And then you got to get a letter that it's closed. And it should be like for major stuff.
So since South Carolina switched to an all due diligence contract, I've really been having all of my buyers get their insurance quotes before due diligence is up.
Yeah.
So when we send you somebody and we're like, we're under contract, how many days does it take for you to get them like a pretty accurate quote on what their policy is going to run them?
So our goal is within 2 days. I mean, if it's something like their due diligence is running out, like we need the answer today, I can push it to the top of the pile. And we have an advantage in our office. We have a whole new business department. So it's not just me sitting there and I can't, get it out. Flood is pretty quick. It's cut and dry. Homeowners, their turnaround time has gotten longer depending on, especially if it's a home over $1.5 million or $2 million, because it does go to a different tier of company. They really underwrite it, and it's a lot of back and forth. And well, what's this claim? And well, why did they live there? And do they still have this car? And then because they can see, it's amazing. Like sometimes people are like, I don't want to give you my birthday or my social. And I'm like, well, in like 7 minutes, I could probably find it. So I don't know what, like I'm worried about my security. I'm like, I am a nobody and I can find it. So you should be worried about it, but you're not really, all you're doing is slowing the train.
I'm trying to help you.
Yeah. Well, help me help you. And so that's our goal. Of course, I mean, I have agents who are like, well, I got to know, holy cow, they didn't do it. And this contract's about to explode. Help me or do something.
Yeah.
And then rates are so high, and people's, I hear it from lenders, their numbers are so tight. It's like, what can we do? And what they want me to do is strip the coverage out and then add it later to get the premium down, which I don't like doing. Because one, those people never add it back. And then when there's a loss, I'm the jerk, who didn't tell them. I'm like, well, there's 74 emails back and forth where I basically said, I did it right. You made me undo it. Here it is undone. Have a nice day. But anyway.
Yeah.
So we see that a lot.
Can you explain flood insurance 101?
Wait. Let's do natural disasters in the part 2 episode.
Okay.
Yeah. Because this is already 30. Yeah.
Okay.
Okay. So I want everybody to stay tuned for part 2 of our time with Mandy, which we're going to talk about flood and earthquake and other natural disasters. But you said something when you came to our office once. You were explaining how an umbrella policy works.
Yeah.
So can you tell the people about that and why they're important?
Yeah. So ideally, if you have assets of any value, which if you own a home, you have an asset of value, you may want to get an umbrella policy. And the idea is literally that it sits on top of your underlying policies, but it's for liability only. So most homeowners policies have $500,000 liability. If your debt collapses with 17 people on it and we all go to the hospital, $500,000 might not cut it, because when my child's paralyzed, I'm coming after you. And so the umbrella would sit on top of that. The homeowners would pay out $500,000, then the umbrella would pay out another $1 million or another $2 million or another $3 million. You buy what you can afford, and you buy what covers your assets. If you are in a $6 million house, a $1 million umbrella is not enough. I always say they're not going to sue somebody. A lawyer's not going to sue somebody who has, owns nothing, rides their bicycle. What are you going to get? There's no reason to sue you. But if you have a nice house and some cars and another house and a boat, I'm coming. And so you want the umbrella to protect that. It also sits over all your other underlying policies. So if you were in an auto wreck, your auto policy would pay out its limit, and then the umbrella would sit on top. State minimum limits are so low that they're scary. It's $25,000. I mean, you could just hit the mailbox in a Tesla and have a $25,000. I mean, one ambulance ride could be $20,000. Like, I don't know. Anyway, they let you get away with that. So most people have higher limits. We only write higher limits because everything costs more than $25,000. And so, but the umbrella would then sit on top of that. So if you hit a minivan with a bunch of kids in it, or a school bus, or any of those things, same, it would sit on top of your boat. It would sit on top of your golf cart policy, which, we see a lot of, people let their 8-year-old drive their golf cart on a public street. Good luck.
Mm-hmm. Yeah.
I mean, it's a disaster waiting to happen. And so, so it sits on top of it. Just gives you an added layer, and it's inexpensive in reality. For $1 million in coverage, it might be $300 or $400, which, is nice when you need it. And people need it in weird ways.
I did think of one more question before we move on to part 2. I've had a lot of clients in the last year or two, especially, that want to buy a big renovation and do their own design. And we've come across polybutylene plumbing.
Yep.
And you'll talk to some contractors who are like, they make such a big stink about it. It's not a big deal. It's been there for 30 years. If it was going to fail, it would have happened already. Yeah. And then some people are like, oh no, you can't get insurance policies on it. It has to be replaced. Do you have an opinion on this?
Yeah, a lot of companies have a huge issue with it. And it was when it was installed in a certain time period, and I can't remember the years. And it's not the actual pipe, it's the fitting. The fittings exploded, which flooded the whole house. So, I mean, if I was an insurance company, I'd be like, thank you. No, just get it out and get it replaced. Some people will replace the fittings. And then there's people in Wadmalaw who, because they're on a well, it eats just any fitting, and they're replacing their fittings every, 8 or 10 years for the same reason. We saw it in Edisto. I can't remember which storm it was. But the whole water system on Edisto got shut down. And then when they turned it back on, it busted all the fittings. So I get that some contractors are like, this stuff's been fine. Well, asbestos was fine also till it wasn't. So, I mean, most insurance companies will not take it.
But if they replace the fitting instead of all of the pipes.
I mean, ideally they want it all. And it's, 30-year-old plumbing at this point. It's probably, if you're doing a big reno, do it. And then also, if you do a really big reno, like a gut, down to the studs, replace everything, the plumbing, the electrical, all of that. A lot of companies will allow us to establish the year built as 2023 instead of 1985, if you can prove that you replaced all of it, which, a lot of people are doing that. I mean, they're doing that in the old village. They're doing it downtown. They're doing it. So if you have the documentation, it changes the rate, because now you're getting a new home rate with new building code, everything. The only catch on the peninsula is the BAR will not let you replace the original historic windows. Right. So they've redone everything, but the windows are not new, and the companies will just stand on it. They're like, we can't make it 2023 because the windows. Like,
Well, speaking of downtown, one last thing. I remember when you came to our office, tell us the craziest premium increase that you have seen in the past year.
I mean, I've seen a lot of those historic homes. Historically they were paying a lot because the value's a lot, but they were paying $9,000, then they were paying $12,000, and then they were paying $18,000, and then they were sort of in the $20s, and now they're in the $80s.
Oh my gosh!
Yeah. So you've got a family home that you've been in forever, but you're 65, and you got to make a choice. Can you come up with $80,000? I mean, maybe. I don't know. If you've been living in the free house you got for 50 years, maybe you can come up with $80,000. Or you want to come up with $80,000. But it's the first time I've ever seen people start to make this decision of backing the wind coverage out, because it's the wind piece that's expensive. That's the exposure. We're on the coast. You're in an older home. You're on the Battery. You're on the front of Sullivan's. That's what's driving the premium. So you basically could buy what's called a fire policy. You know, it covers fire and pipes in the house and all those things. You know, I'm just spitballing, but maybe $18,000. It's the wind piece that's costing you $50,000. Mm-hmm. And so they'll say, well, I guess I'll just self-insure the wind exposure, mm-hmm. which to me, I feel like my house is going to blow away before it catches on fire. Yeah. But it's just a financial choice you have to make. And if you don't have a mortgage, you can make it. If you don't have a mortgage, you can self-insure the whole thing. Mm-hmm. People go, well, this is ridiculous. I'm just going to pay my house off. I'm like, okay. Okay, you should have paid it off on the front end. And
yeah.
Anyway,
I know.
Because now if there's damage to it, it's on you. There's nobody to call. Yeah. So can you not only pay your mortgage off, but can you come up with another $1.5 million just to get a new house?
Yes, which supports my theory that people are just nuts.
Yeah, they are nuts. The only piece about self-insuring that really makes me nervous is I think everyone should buy at least a liability policy.
Yeah.
You might have $6 million in the bank and can rebuild your house, but my child gets injured or dies at your house in your pool, you have no idea how much I'm coming after you for.
Right.
Like, you might not have that much.
Hope you're scared, everyone. And if you are, call Mandy Davis with Anderson Insurance. Mandy, tell everybody where they can find you, and stay tuned for part 2 as well, guys. But yeah.
So my email is mdavis@aiasc.com. And then my office number is 843-725-6798.
And she's excellent, let me tell you. She has taken
you.
such good care of my clients since I started working with her recently.
Hopefully, if you understand what the policy covers, paying the premium feels a little better.
Yeah. I have no idea what my policy covers. So I'm sending it to you ASAP. Thank you so much for tuning in, guys. Don't forget to rate, review, and subscribe. Tell everyone you know all of the things that you learned, and tell them to subscribe to the podcast too. You can find us at Between Two Brokers and at Smith Spencer Real Estate on Instagram, and we will see you next time.